Hey guys, what's up? Alec back with the daily stock market, and look at that, a fairly green day with Pinterest up 14%, Alibaba up 8%, Unity up 6%, and the list goes on and on. But we also have some stocks that are down pretty big today after hours, like Affirm that's down 13% after reporting earnings. We also have EPS, which was a miss of negative 65 cents compared to negative 59 cents that was expected. We have Nvidia with a huge 7.6% bounce back or more. So make sure you subscribe with post notifications on so you don't miss out on any future uploads. Make sure you stay throughout the end of the video if you want to hear about Nvidia and some of the other stocks that are making big moves. We also have Tesla, which a lot of people don't know, just went through a recent split. So if you remember looking at Tesla, if you're an avid Tesla investor, you remember them trading anywhere between like $700 and $900 per share. Now we have them closer to $296. So in this video, we're going to dive into all that with Tesla, Nvidia, and much, much more. So make sure you also smash a big thumbs up in this video, and let's dive right into Tesla first. All right, so first up, we have Tesla not making much moves from the split. We have them up 42% in the past month, so that could have been priced in the last 3 months. A lot of people were expecting Tesla to split for a while, and if you've been following the channel or even on the close friends list, you know it was going to split on this exact date. Okay, so we've seen at a year low around $200 per share, $215 per share. In my personal opinion, we'll see Tesla below $275 again and even closer to under $200 per share. So I have price alerts set around there. Right now, I have a small position in my short-term trading account. I have a larger position in my long-term trading account. I'm dollar cost averaging in over $25 per day in Tesla. They're one of my favorite long-term stocks if we're talking about a 5 to 10 year horizon. There's probably very few stocks that are going to be able to outpace Tesla in that timeline. Okay, if we focus our eyes on the market cap, they're trading under a $1 trillion market cap once again. And we also have them at a PE ratio of around 100, okay, which historically it's usually a lot higher, implying now it's a little bit more of a better deal. Okay, we have a 52-week high of $414 per share, which I think we can exceed again in the long-term future. Not even the long-term, probably in the next 6 to 24 months. Okay, if we scroll down a little bit more, we can see there's a billionaire, Ron Barron, who's incredibly bullish on Tesla, SpaceX, and this apparel company that he calls the Lululemon of healthcare. I am incredibly bullish for my children, for my grandchildren, and for me for the next 20 years. Barron's most recent purchase includes approximately $100 million invested in SpaceX and ticker symbol FIGS. Remember, these are long-term investments, it looks like, for this guy. Okay, there aren't many investors with a 20-year horizon at the age of 79, but that's exactly how far a billionaire is looking ahead, Ron Barron, and is safe to say he is optimistic. But you might want to do a little bit more of your own research and dive a little deeper exactly when Tesla announced that stock split, because I forget the exact date, okay, but from even from July or June or end of June, early July, that's still a 32% gain in the price. Now let's just look at FIGS real quick because that's the one the billionaire was talking about. We see them up 17% on the day, running up pretty high, 41% up in the last month. However, they're down 67% in the last year, and from their IPO at $28 per share, they're still down 58%. The market cap is only $1.9 billion, around $2 billion. Okay, FIGS is a direct-to-consumer healthcare apparel and lifestyle brand that seeks to celebrate, empower, and serve the current future generations of healthcare. It offers lab coats, underscrubs, outerwear, loungewear, compression socks, footwear, masks, and face shields that are specifically designed for the needs and preferences of the medical community. It's okay, so that's pretty interesting. And even if they grow to a $10 billion, $14 billion market cap over the next 5 to 10 years, that's a huge gain for its early investors into FIGS. So it's a smaller company, and nowadays anything under $2 billion is kind of like a mid cap. Anything over $2 to $5 billion is going to be considered a large cap, and anything over $100 billion is typically considered like a mega cap, for example, or over 100 to 200 billion. That would be closer to a mega cap company. Okay, so we saw FIGs even go as high as $43 per share, which it's definitely possible for FIGs to return to those levels over the long term. So if you're a long-term investor, this might be a good speculative play for your portfolio. You know, it's possible that this stock could 3 to 5x over the coming years. And the next one up is Nvda, which we talked about from pre-market to aftermarket, was up around 7.6%. And as we scroll down, you can see I have 3.6 shares. We're up around 7% roughly. Okay, we have a reoccurring buy as well. We have a 52-week low of 140 and a 52-week high of 346 with a PE ratio of 56. Okay. Now, with that being said, we do have a 52-week low of 145. The question is, can it get that low? And I personally have my price alert set below 170. And I think dollar cost averaging into Nvidia now is a pretty good idea for long-term investors. We even can see that just from the 52-week high, we have Nvidia down 46%. Okay, so if we plug in $180, $179 per share, which it's currently at now, and we have $333 per share. That implies an 86% upward movement in Nvidia's stock price just to get back to the all-time high, that 52-week high. And in my personal opinion, I think that that is not the top of Nvidia, and we look back in the history books, and that's the most the company is ever worth in history of Nvidia is $333 per share, and it'll never be higher market cap or valued higher at that. No, I don't think that is what's going to happen with Nvidia. So if you're a long-term investor, I think pretty much that 86% return on investment is almost guaranteed. You know, it might take 3 to 5 years. We don't know how long it's going to take is the thing. But I think that 86% return on investment back to all-time highs, back to a 52-week high. It's not even like that all-time high was that long ago. It was just 8 months ago, approximately 9 months ago. So these are definitely realistic goals for Nvidia. 86% growth is definitely possible. Can we get a better deal? Can we buy under $150 per share on Nvidia? Yes, there is a good guarantee that we'll be able to, but that's why I'm dollar cost averaging in. I have $5 on my short-term account, and I'm dollar cost averaging in a little bit more aggressive than that on my longer-term accounts, by the way. And if we check out an update on what analysts have to say about Nvidia, we see that on average, they agree about a 22% upside to around $220 per share in the next 12 months. If we scroll down and see where these analysts are coming from, we can see some top 5-star analysts, some top 25 analysts most of them are saying above $200 per share, and some of them are even saying above $280 per share with a 67% success rate and an average return of 28%. We have one analyst that's saying $165 per share in the next 12 months with a 77% success rate. Okay, so that's only one analyst out of this whole page of analysts that we're looking at that just reiterated yesterday. It's the only one with under a 190 price target, and most of them have above a $200 price target. If we keep scrolling down, we see more top 5-star analysts coming from, you know, notable places like Citigroup, JP Morgan, Benchmark Company, with all above $200 price targets just reiterated yesterday. We have some more people coming in around $2 per share on those price targets. But on average, we see that closer to a 22% upside in the next 12 months. And if I can get a 20% gain on my long-term investments every 12 months, I would be a happy camper. So that's obviously why I am delegating some of my money and investments to Nvidia that I'm going to be planning to hold over the next 12 months. Overall, it is a company I do want to be a part of for the long term. Let's finish this video with some quick thoughts about Affirm. Okay, they're down 15%, 21% the past week, and we see them up 30% the past 3 months, which is pretty interesting. And they were up as much as 92% before they started that downtrend that we are seeing. Okay, and remember, they were a darling COVID pandemic stock. They were at $160 per share. They had a wild ride up, raising about 23% from IPO. Now they are ice cold and they are a company I'm staying away from. You can see I actually took a put out on that one. So that's going to be absolutely printing, probably a 200% gain tomorrow morning with a 14% downward movement just in one day. So that'll be really good. So here we see a nice article, Affirm Q4 highlights, revenue beat, EPS miss, updated guidance, Shopify partnership, bringing customers in. Affirm Holdings reported fourth quarter revenues of $364 million, up 39% year over year. The company reported active merchants of 235,000, with Shopify highlighted as a reason for the increase. Okay, so that is interesting. Overall, I am staying away from them for long-term investing. They're just too risky. The business model is not proven. There's a lot of delinquents on their paying right now. They're not paying back their loans that they're taking out. It's a buy now, pay later kind of system. And a lot of people are calling it buy now, pay never. Okay, so that's a bad thing. You don't want a business model revolved around that. It's an unproven business model. It's a newer business model. So there's a lot of risks with something like Affirm. If we see them closer to $15 per share or under $20 per share, there might be swing trade. Probabilities for success are going to be a lot higher. Under $20 per share, closer to 15. Also, maybe a call option for a bounce back above, from 15 to above $20 per share could also be a possibility. But I'll have my price alerts set around 21, 18, 14, and 15 to see and reevaluate at that point. So I hope you guys continue to enjoy these stock market updates. I try to keep them quick, and I try to jam pack as much information and commentary as quick as possible in these videos. So if you appreciate that, smash a thumbs up and subscribe with post notifications on. If you watch to the end of the videos and you've been watching my videos for a while, make sure you subscribe with post notifications on. It doesn't take any effort, and it helps my channel out a ton if you subscribe with post notifications on, share, comment, and like the video. That's all you got to do. That's all I ask for. Thank you guys for all the love and support. If you want to join my close friends list and see exactly what puts I'm buying, what call options I'm buying, what long-term stocks I'm buying, what swing trades I'm buying, make sure you message me on Instagram. Over 1,500 students now, over 600 positive testimonials. If you want to read some for yourself, check out success number 5, success number 4, success number 3. You won't see those green ones that say the close friends list because that's for close friends list members only. But check out some of the success, even some of the recent success. If you go towards the end, you'll get to the more recent highlights also. But we've been making hundreds and hundreds of dollars just off one trade at a time. So I do have sign-up shutdown right now, but message me to get on the wait list, and you'll be one of the first people to get on the close friends list when I open sign-ups back up. All right, guys, thank you for all the love and support. I'll see you guys in the next video. Share this with a friend, by the way, and remember, don't time the market, buy the market. Peace.